In October 2025, 4 quantum computing stocks under $5 turned every $1,000 into over $15,000 in less than 12 months. The investors who found them early are not talking about it, because by the time everyone is talking about a stock, the easy money is already gone. Right now, quantum computing is entering its most important phase since those early gains. IonQ just connected 2 separate quantum computers together for the first time in history. Nvidia just released open-source software to control quantum computers. And the US government just committed billions in defense funding to quantum computing programs. And sitting right in front of all of this momentum are 4 quantum stocks, all under $25. Stocks that most investors are walking right past because they are focused on the names that already moved. I went through every quantum computing company in the public market to build this list. The criteria were simple: real technology, real revenue, or a clear path to it, and a specific catalyst that could change the price dramatically in the next 12 months. If you want to get into quantum computing before the next wave hits, hit that subscribe button right now. This is exactly the kind of research that changes your financial future. Here is what we are covering: 4 quantum stocks, all under $25. One is the only company in the world that has already deployed quantum computing for real, paying customers at scale, with 179% revenue growth. One is the only quantum company fully integrated into Nvidia's AI computing stack, with a government contract probability that prediction markets put at 39%. One is building a photonic quantum computer that operates at room temperature, which every other approach in the industry cannot do. And one is the only company that has already deployed post-quantum cybersecurity in actual military applications in space. I am saving the most explosive near-term catalyst for last. Let's get into it. Stock number 1, DWave Quantum, ticker QBTS. Current price around $23. Most people look at DWave and think it is just another speculative quantum stock trading on hype. That reaction tells me most people have not actually looked at the numbers. Here is the reframe. DWave is not a research project. It is the only quantum computing company in the world with a proven commercial model, real paying enterprise customers, and revenue that is growing at an extraordinary rate. DWave's quantum annealing approach targets optimization problems and has produced a real commercial book, with recent 2026 deals including a $20 million Florida Atlantic University system sale and a $10 million quantum computing as a service agreement with a Fortune 100 buyer. Think about what that means. A Fortune 100 company, one of the 100 largest businesses in America, just signed a real contract to run workloads on DWave's quantum computer. That is not a pilot. That is not a research partnership. That is a paying customer. DWave reported fiscal year 2025 revenue of $24.6 million, a 179% increase from $8.8 million 1 year earlier. That is particularly true in the hardware realm, with $16.2 million coming from system sales. 179% revenue growth. System sales that prove customers are not just testing the technology, but buying it outright. And here is the detail that most investors miss entirely. DWave is the only dual-platform quantum computing company providing both annealing and gate model systems. That means DWave does not need to win the debate about which quantum architecture is best. They have both. If annealing wins, they win. If gate model wins, they also win. That optionality is unique in the entire quantum computing market. The analyst consensus price target for DWave sits at $35.77, with 13 buy ratings and 2 holds. That implies over 50% upside from current levels. Here is my honest concern. DWave's quantum annealing approach is specialized for optimization problems. It is not a general-purpose quantum computer. If the market ultimately moves entirely to gate-based systems for all use cases, DWave's moat narrows. And the stock is still trading at a very high valuation relative to current revenue. My takeaway: the only quantum company with a proven commercial model, Fortune 100 customers, 179% revenue growth, and dual-platform optionality. At $23 with 13 analyst buy ratings and a $35 price target, this is the safest entry point in the quantum computing space right now. Strong buy. Now let's move to the quantum company that has the most direct connection to the biggest technology story of the decade. Stock number 2, Rigetti Computing, ticker RGTI. Current price around $16. Most people look at Rigetti and see a quantum company that missed its revenue target last quarter and has been declining all year. They are looking at the wrong time frame entirely. Here is the reframe. Rigetti is not just a quantum hardware company, it is the only quantum computing company directly integrated into Nvidia's computing stack. And that integration is about to become enormously more valuable. Rigetti's 108-qubit Cepheus-1 system reached general availability in Q1 2026 at roughly 99.1% median 2-qubit gate fidelity. Its Fab 1 is one of the few integrated quantum device fabs in the industry. Think about what Fab 1 means. Rigetti does not just design quantum chips, it manufactures them in its own facility in the United States. In a world where semiconductor supply chain security is a national priority, owning your own quantum fab is not just an operational advantage, it is a strategic asset that governments will pay for. And here is the catalyst that most investors are completely ignoring. Prediction markets give Rigetti a 39% probability that the US federal government takes a direct stake in the company. That is the highest of any quantum pure-play stock on that prediction market. 39% probability of a US government equity investment in a company trading at $16. If that happens, the stock does not go up 10 or 20%, it rethinks its entire valuation. Here is my honest concern. Revenue is small and the most recent quarter missed expectations. The 2027 roadmap to 1,000 plus qubits assumes manufacturing execution that has slipped before. This is not a stock for investors who need near-term results. My takeaway: Nvidia integration, US-based quantum fab, highest government stake probability in the sector, and a valuation that reflects the recent revenue disappointment but not the potential upside from any of those catalysts. This is a buy for investors who can hold through volatility. Drop a comment right now. Did you know Rigetti has its own quantum chip manufacturing facility in the United States? Because that changes the entire investment thesis. Let's keep going. Stock number 3, Quantum Computing Inc., ticker QUBT. Current price around $8. Most people look at Quantum Computing Inc. and see the smallest and most speculative name in the quantum space. And they are partially right about the risk. But they are completely missing what makes this company unique. Here is the reframe. Quantum Computing Inc. is not trying to compete with IonQ or DWave on the same playing field. They are building something fundamentally different. A photonic quantum computer that operates at room temperature. Think about why that matters. Every other major quantum computing approach requires extreme cooling. Temperatures colder than outer space. That cooling infrastructure is expensive, complex, and difficult to scale. Quantum Computing Inc. develops thin-film lithium niobate chips for optical devices and is developing the Entropy quantum computer, designed to solve complex optimization problems using photons instead of electrons or ions. Photons do not need cooling. A photonic quantum computer can operate at room temperature. That is not a minor technical detail. That is potentially the most important scaling advantage in the entire quantum computing industry. Quantum Computing Inc. is gaining traction with positive analyst ratings and a promising new photonic platform. The company is set to report earnings soon, with expectations of solid revenue growth. Here is what makes the timing interesting right now. Quantum Computing Inc. is about to report earnings. If those numbers show the kind of revenue progress the photonic platform suggests is coming, this stock will not stay at $8. Here is my honest concern. This is the most speculative stock on this list. The photonic approach has significant theoretical advantages, but is also the least proven at commercial scale. Revenue is still very small. This is strictly for investors who understand they are taking real risk. My takeaway: room temperature quantum computing with a photonic approach that solves the single biggest scaling challenge in the industry. Earnings catalyst approaching, and a stock that has already proven it can move dramatically on positive news. This is a high-risk, high-conviction position for investors who understand what they own. Here is where the story gets most interesting, because the final stock on this list is not just building quantum computing, it is building the security infrastructure that will protect everything quantum computing threatens to destroy. Stock number 4. SEAL SQ Corporation, ticker LAES, current price around $6. I know what you're thinking. Post-quantum cybersecurity sounds like something that matters in 10 years, but not today. You are wrong, and here is exactly why this stock belongs on this list right now. Here is the reframe. SEAL SQ is not building security for a hypothetical future quantum threat. It is building security for a threat that governments and militaries have already concluded is real and imminent. And it has already deployed that security in the most demanding environment possible. The company recently completed a pilot project with the Swiss Armed Forces Space Command, testing secure communications infrastructure in space, in a military environment, under conditions where a security failure is not just costly, it is catastrophic. Q1 2026 revenue came in at $4.1 million, up more than 200% compared to the same period last year. And management is projecting full-year revenue growth of 50 to 100%, driven by expanding partnerships and increasing demand. 200% revenue growth, Swiss military validation in space, and a structural threat that every government, every financial institution, and every technology company on the planet will eventually need to address. Here is the detail that makes SEAL SQ particularly interesting right now. The Iran crisis and the military operations happening today are generating enormous amounts of classified communications. Every one of those communications needs to be protected against future quantum decryption. SEAL SQ builds exactly that protection. Here is my honest concern. Post-quantum security is a threat that has not fully arrived yet, and SEAL SQ is a small company that will eventually face competition from much larger players when the market matures. My takeaway: 200% revenue growth, Swiss military validation, defense and government demand accelerating in real time, and a structural technology shift that every institution on the planet will eventually need to address. At $6, this is one of the most asymmetric setups in the entire quantum computing ecosystem. Strong buy. Let me bring this all together. 4 quantum stocks all under $25, 4 completely different pieces of the quantum computing revolution, and 4 specific reasons the market is underpricing each of them right now. From 2026 to 2034, Fortune Business Insights expects the quantum computing market to expand at a 30.6% compound annual growth rate. That is what professional analysts are forecasting based on the actual trajectory of the technology. If I had to rank all 4 for new money today, here is exactly how I see it. Number 1 is DWave, the only quantum company with proven commercial revenue, Fortune 100 customers, and dual-platform optionality. This is the safest entry point in pure-play quantum right now. Number 2 is SEAL SQ. 200% revenue growth, military validation, and a structural security threat that grows more urgent every day. Number 3 is Rigetti. Nvidia integration, US quantum fab, and the highest government stake probability in the sector. Number 4 is Quantum Computing Inc. Highest risk and highest upside. Room temperature photonic quantum computing with an earnings catalyst approaching. Here is the investing truth I want to leave you with today. Over 7 trading days in April 2026, shares of pure-play quantum computing stocks soared by 72%, 37% and 56% respectively. 72%, 37%, 56% in 7 trading days. The investors who owned these stocks on day 1 of that move did not get lucky. They did the work. They understood the technology. They sized their positions appropriately, and they held through the volatility. You just did the work. You now understand 4 quantum stocks under $25 better than most investors who will never look past the headline numbers. The quantum computing revolution is not coming, it is here. The question is whether you are positioned for it. Disagree with my rankings? Tell me in the comments. Which quantum stock would you buy first? And which one do you think is the biggest trap? Subscribe for weekly research on where the next wave of technology investing is building. No sponsors, no fluff, just the analysis. See you in the next one.